Hello traders, the title of the video is Elliott waves count without leaving any stone unturned. Let's get started. I'm on the monthly chart of amounts apply material incorporation epic AMAT Alpha Mike Alpha Tango. And we want to talk about Elliott wave count without leaving any stone unturned. Right, so we're going to start counting wave. This one looks like a first Elliott wave. All right, so first wave. And we're going to check everything as we are progressing. All right, color into red. That's the first Elliott wave. This is the second Elliott wave, bringing the price into the zone of 78%. A Fibonacci retracement of the first wave. So one thing we need to understand, whenever we see that there is a deep retracement during the second Elliott wave, we need to start questioning, okay, the validity of the trend. All right, why the first buyers are willing to take as much as 78% profit during the first wave, which after the first wave, which means we'll put a question mark on the first wave because it's the signature of the bulls, all right, in an uptrend, and it's the signature of the bear in a downtrend, all right. So you have to understand that the price was consolidating before, all right. So people were selling in this zone. So as the price reaches that zone, there were more sellers that came in and they were selling it down, selling it down, selling it down, as the smart money were buying, okay, the stock. Right? But I want to draw a trend line so you may understand why people buy it, sold it to that point. You understand? You see this trend line that I'm drawing on my chart, connecting this point here and this one here. If you place that line on your chart, color in orange, okay, you will see that you can understand what was going through the mind of those traders at that point in time. As the price went up fast, it breaks above, okay, the orange trend line. It was so important for them to bring it back all the way here to retain that orange, okay, trend line. So that may be just okay, something playing on the mind of those traders that were trading this stock. And they didn't want the second wave to stop above that trend line. And they want definitely to retest it, creating what we call a deep retracement during the second Elliott wave. All right? All right. Now the question is this: if the true first wave, now following our guideline, we'll say normally that we'll put a question mark on this first wave definitely because it didn't break all the resistance on the left hand side. Didn't break this resistance, didn't break this one, it's stuck here. All right, so definitely we'll put a question mark on this first wave, but with all that we got at that point in time, we'll continue to label it and say, okay, maybe this is the first wave. Now deep retracement, okay, second wave, and the question is, it is the third Elliott wave. So far there is no Elliott wave violation, but as I mentioned at the beginning of this video, this is an Elliott wave count without leaving any stone unturned. So which means as we are counting the wave, we will be questioning the validity of each wave. All right. Okay, so probably that's the third Elliott wave. And hopefully the fourth wave will be shallow, retesting the top of my pitchfork tool right here. All right. All right. I'll call out the fourth wave, the forecast fourth wave, hopefully. Doesn't have to, this is an expectation, understand? This is an expectation. And the fifth Elliott wave into this resistance zone here, somewhere there. He must break above it, right there. Now, there's nothing wrong with this wave count, but we want to go a little bit deeper, all right? Personally, looking at the characteristic of the first wave, this one failed to break resistance on the left-hand side, but it managed to break this trend line. So we understand that, okay? So we put a question mark on it. The second wave is quite deep. Now we understand why, because they want to retest the orange trend line. Question, is this the third Elliott wave, or is this the first minor wave of the real third Elliott wave? Understand that the third Elliott wave, the first wave, the third wave, and the fifth wave can be extended. So whenever you label something first, third, or fifth wave, understand that those waves can be extended. So now that I'm calling this one that probably the third Elliott wave, this may just be the first minor wave of the first wave, one step at a time, without leaving any stone unturned. Okay? Now, we're going to go back again to the yearly chart, which we have been talking about recently, that when we count wave on the monthly chart, it will be essential to check the yearly chart. And what have we said? You remember the last video that we have posted, all right, about Elliott wave. All right, I'm looking for the title of that video, Avoiding Elliott wave mistakes. And I was telling you that you should never, all right? You get the message now? Forget that mistake, and you do not want to fall into that trading Elliott wave count error, all right? Okay, somewhere here, something to do with how to avoid Elliott wave trading mistakes. That's the latest videos that we have posted at 2-4. I will find it soon. All right? Don't worry, I will find it soon. Okay, let's continue so that you don't get upset with me. So what we have saying is this, that see the prior trend, you see there was a multi-way here, there was a trend in first, and then a prior pullback here. What do we need to do? You remember, correct? We apply Fibonacci extension to that prior multi-way. And we were saying to traders that sometimes traders do not have enough data. So in that case, they can only work with what they got. But in that case, they are likely to make a mistake because they will not be able to see that 138.2% Fibonacci extension level of the prior multi-wave. You remember that? You get it now, okay, good. That's very, very important for us. I was talking about this also when we see the shadow on the yearly chart like this, we can discount it when we are applying the Fibonacci extension to the prior, okay, multi-wave. This is what I did here. You see, I just done it now, okay? So if you don't want to do it, you can draw it like this as I did, and then you apply again to the top, and you highlight the second 138.2% Fibonacci extension level, which is at this point very useless for us. So you can just leave it there and just be aware of it. But practically speaking, it's better to put it at the closing price. If we have this long shadow, you'll see that very often on the yearly chart. Just discount it completely, don't use it. All right, or apply it here and highlight it and leave it there. So this is useful 138.2% Fibonacci extension level that we must watch. So what were we saying? You remember? So now that we are applying that, this is about counting the Elliott wave without leaving any stone unturned, which we don't want to forget anything, we don't want to miss anything, and we don't want to get into mistakes, or we don't want to get into trouble making a stupid, okay, crazy Elliott wave trading mistake. So now you can see that the price now exactly in that, okay, 138.2% Fibonacci extension level of the prior trend or the prior multi-wave. I want to show you something very fast. Okay, recently on a 50-minute time frame, you see what's happened there? Around that 138.2%, price D below, gap up, just form this beautiful double top chart pattern here. It gap up and form a bearish chart pattern. It's what we call a cancellation of a signal. Price gap out, which is a bullish move out, only to form a bearish chart pattern. What is it telling us? Exhaustion. I'm tired. I'm not going up anymore. Here it is, people sold it down. Okay, in the vicinity of that 138.2% Fibonacci extension level. All right, there's another trend line here that is popping up now. Okay, all right. We talked about this last time. Okay, let's go back to the monthly chart. So very important for us. So you can see that 1, 2, 3, fourth wave. Before we can talk about a new trend, remember that the price must find a support and continue to go up above the 138.2% Fibonacci extension level of the prior motive wave. All right. So far, this is what we can see. So we are counting wave, first wave, second wave, third wave, fourth wave, or maybe this is the first minor wave of the third wave, followed by the second minor wave, and then so on and so on and so on, if you will continue to go up more. But our forecast is now first wave, second wave, third wave, probably fourth wave will try to retest the edge of the pitchfork tool and then break past above it and to go back up, okay, to form the fifth wave, okay, that is coming here, okay, this high here. We prefer it to break above that significant high there. If he will do that, probably we may have an extension during the third area wave. All right. Without any stone unturned, we're going to check what type of a third wave we have at this point in time, one step at a time. It may end up being a first minor wave or a third wave. I keep saying it because it's so important. And we're going to apply Fibonacci extension to the first wave to see whether the third, our current supposed to be third area wave, breaks above which level? The 161.8% Fibonacci extension level of the first wave. It did, which is good. So this currently called third area wave is an extended third area wave because it breaks above the 161.8% Fibonacci extension level of the first wave. So far, so good. It's an extended third wave. But, as I've been saying 100 times, it can end up being an extended third area wave. All right? Don't forget that. Whenever you are dealing with the first, the third, and the fifth wave, you label anything first, or third, or fifth wave. Remember that that third, or first, or fifth wave can be extended. All right? Okay? So now this is our forecast, that first wave, second wave, third wave. But something is bothering me a little bit. Which one? Is this first wave that failed to break the resistance on the left-hand side. Now, so the next step now is to go into the mind of other traders like myself that are a little bit, okay, disturbed by the fact that this first wave could not break the resistance on the left-hand side. So if we go into the mind of those traders, all right, they will not call this one first wave yet. They will not call this one second wave yet. All right? But they will only say, now this is the first wave, and they will expect the second wave. You understand? So we count our wave on our own wave count. Now we're going to the mind of other traders to see how other traders may count their wave. So that's why I don't get into argument with traders and say, your wave count is wrong. Or if anyone say my wave count is wrong, I just turn around and say, well, this is my wave count, and I did not violate the market pattern. There was no area wave violation, and I did not violate the market pattern. But it will be a mistake. I will come back to that in a minute. So for other traders, they may say, George, I don't like this first wave because it did not break resistance on the left-hand side. I will call this one the beginning of the trend, which is also true. Doesn't mean your wave count is wrong, but you'll find out later on if those who count here are the dominant force, because if they are dominant force, as soon as they have their fifth wave, they will push it back down. I think that they're going to push it back down after they have their fifth wave because of the resistance here, unless we see an extension. All right? So going to the mind of other traders, they will say first wave, second wave, expecting the third wave, and then a fourth wave. So how do we can use, because we are using already this pitchfork tool, it will be useful for us because all we need to do is to project it in the direction of the price to focus the possible reversal point. Doesn't mean that's where you will change, but possible. All right? This is just an expectation. Remember? Expectation. Okay? Expectation, all right? I don't make any promise, all right? All right, here it is. So probably pushing it back down to retest that one there. Expectation, okay? And then the fifth wave. So those three, let me say first wave, we only have first wave so far. We expect as people are trying to sell in the same zone here, push it back down from the second wave. Even that second wave does not have to stop there. It can come all the way to the median line or the pitchfork tool. So understand that, all right? So don't take it as an exact science. It's a forecast, it's an expectation, all right? Okay? We come here. The most important thing, shouldn't violate the area of principle. Okay, so far leave it here. Third wave and the fourth wave retesting the top of the projection or the pitchfork tool. Even that can go down, though it will be nicer if it stop here. It can go down to the median line of our projected channel, which will come back all the way here. That will be a little bit deep retracement for the fourth wave, which is not good because the strongest part of the trend is the third area wave. And you remember at the Day Pro Trader YouTube channel, there is a video that I call A Stock Trader Explains the 38.2%, the 38.2% Fibonacci retracement like a pro. Stock Trader explain the 38.2% Fibonacci retracement like a pro. So if the third wave is very, very strong, we are likely to see a shallow 38.2% fourth area wave coming somewhere here. Likely, all right? I'm choosing my word carefully so trader do not use the video as a signal to buy or sell. In fact, I do not give signal to trader to buy or sell. I record videos, educational video too, so trader may improve their trading strategies, all right? So here it is. So going to the mind of other traders, let me say first wave, second wave, expected somewhere here, even down here. Third wave up. So the third, if you want to know the end of the third, we can keep projecting this pitchfork tool. So we project it here, project it again here. So we have another line up there. Market geometry. All right. If you don't know about market geometry, it means that you are not yet a subscriber of a Day Pro Trader YouTube channel, because traders that subscribe to all our channel understand what I'm talking about here, all right? So we keep projecting it, that will give us, okay, the possible reversal point using the market geometry, all right? Third wave, fourth wave, usually are colored into pink, and then the fifth wave. All right, you see now? So I look at my own wave count. So if the one I did first, all right, preliminary wave count, assuming that this is the first wave, so we say first wave, second wave, third wave, fourth wave, and fifth wave ending somewhere here. Remember that? Okay, now next step, we go into the mind of other traders. We say, other traders will say, all right, I discount this as the first wave. I call this one instead the first wave. So they go first wave, second wave, third wave, fourth wave, fifth wave. We use the pitchfork tool. We project in the direction of the price to see possible reversal point. So this is another forecast. Okay? All right? We also went to the yearly chart. This is about, okay, leaving no stone unturned. All right? We make sure we apply Fibonacci extension to the prior motive wave, highlight the 38.2%, ignoring the shadow on top of the yearly chart. Using the Fibonacci extension to the closing price here, we highlight the level of $44.43. That's where the price is right now. All right. So, but everything will become, let's go back again to the monthly chart. So you want to know the possible scenario that can occur, so you are not surprised if it's happening. So we talk about area way so far, but nothing can stop this price now. All right. So like you see, now it's did 1, 2, 3. All right. If it come back down, all right. If it come back down 1, 2, 3, 4, 5 down, what will you be talking about? We'll be talking about a flat correction. Now you understand that I keep talking about one step at a time. All right. With the information that we have today, I'm using word like expectation. All right. But look at this. Suppose, as we were here now, because it's a resistance level, for the bullish momentum to continue, it must break above the 138.2% Fibonacci extension level of the prior move. So far, we are stuck here until it finds a support above the $44.43. It's critical. And the smart money know it. This month, they are acknowledging it already here. So, which means, all right, price can change direction. Though we are expecting it to go up more, which is good for Ahmad, their director will love me for saying that. All right, but what I'm about to say now, they may not like it. Okay, which means a flat correction may be in place. Price may come down instead like this in 5 ways. 1, 2, 3, 4, 5. And everybody will be saying, George, you were saying that we're going to have a trend. What a useless area wave trader you are. Where do you learn your area wave from? And I'll tell them one step at a time. Okay, one step at a time without assuming anything. Okay, we trade in a price, we are ready to buy, we are ready to sell. Signal fail, just come out. Okay, you are not God to know the future. Okay, so here we are. So if, for instance, the price stuck below the 138.2% level, came down 1, 2, 3, 4, 5, you will be talking in another video, all right, you say that, okay, in fact, it was a trending phase, and all this moved down. This moved down, okay, and through this, okay, is that correct? 1. Okay, blah, blah, blah. It's quite messy. Okay, well, I'll do my best. Something like this. 1, 2. I'm getting hungry. I think I'm getting hungry. What am I doing? Forgive me, trader. Forgive me, trader. I'm getting tired. What? Okay. Oh, yeah, I'm trying. Okay, now, so just think of it like this, okay? All this move here, all right? Round all the way up here, all right? Flat correction, coming down 1, 2, 3, 4, 5, all right? If the price did that, that would be a gigantic correction for the, all right? For this Ahmad stock. Are you getting it now? All right. So the reason why there's I'm doing this, you have to understand. All I need to do for trade data foreigner, we have a kind of a double bottom here. If I cover it now, you understand why I'm laughing when I'm here now, because here this is 1, 2, 3. All right. Now we have a double bottom here, and then we have again 1, 2, 3. It's a double retracement if the price fail to find a support above. Repeat, if it fail to find a support above the $44.43. So if that is the case, we'll talk about a flat correction. This move down 1, 2, 3 here. We cover this session because of the double bottom, and then we have 1, 2, 3, and we say a flat correction is underway, and the price will come down 1, 2, 3, 4, 5. Right now, it's looking bullish, but for that bullish momentum to continue, before we can talk about a new trend in place, the price must break above the $44.43, that 138.2% Fibonacci extension level of the prior or trending phase. All right? Have we let any stone unturned so far? All right, so we were on the monthly chart. We came to the yearly chart to see if everything's adding up nicely. We see the bigger picture, all right? we come the way we see first time. We also went to the mind, okay, so to speak, of other traders to see how other traders may count their way. Because the reason why you need to go into the mind of other traders, what I've noticed that typical area with traders like us, we can be sometimes a little bit arrogant or aggressive, which means we are laughing, mocking other traders and say that they don't know anything about the price structure. We know better. And sometimes they will screw you up and you wonder, oh, what has happened here? So therefore, or you may think that, okay, my wave count is perfect, it's correct. Yes, there was no area wave violation and I stick to my wave count. Surprise, surprise. Those who you were thinking that they were completely wrong will win the day, and their wave count will stand there, and then nothing we can do about it. Though your wave count was correct, or you think that the other people, their wave count is wrong, well, they have enjoyed themselves with their dodgy, so to speak, their dodgy wave count. So that's why we try to go into their mind and say what those crazy traders may see on this chart, all right? So we have it on the chart, and we are ready for it. Okay, though it's looking bullish for Amount, a very popular stock, American stock. So if you are trading stock, you trade American stock, and you never trade Amount, it's a very friendly stock for day trading, swing trading, and traders love Amount. Or I talked about it before, Applied Material Incorporation, all right, belonging to the technology sector, a semiconductor. I'm improving my American accent, by the way, all right. Now, I need to practice more, okay, all right. So here it is, okay. So you see now. Okay, so now we haven't finished it. I think there's one more thing we need to look at. So you remember the higher degree and the lower degree. So we see now talking about, so we see 1, 2, 3. We were talking about 1, 2, 3, expecting fourth wave, fifth wave. Okay, all right. That's what we have done today. But looking at the bigger picture, what can we think of now? All right, looking at the bigger picture. I will refer you to that video that we were talking about, area wave infinity. All right. Oh, can you pass some food through the computer for me? I think it's time. Okay, I was talking about how to master the infinity of the area wave principle. All right. When we count 1 and 2, all right. You remember? You count 1, 2, 3, 4, 5. All right, it's 1. Okay. And then those 1, 2, 3, 4, 5, 1, and the correction become 1 and 2. So here it is. If you counted 1, 2, 3, 4, 5, 1, 2, 3, correction wave, those 1, 2, 3, 4, 5, and then 1, 2, 3, the trending phase and the corrective phase become 1 and 2. So we'll label this one now for the bigger cycle. Talking about, I'll stop it here. Okay, okay, all right. You want to put it here? Gigantic, all right. Practically, I'll leave it here. Okay. So now you will say first wave of a higher degree. All right. At this point in time, you love that phrase now, isn't it? I've done it 100 times. At this point in time, we can say that this is the second wave of a higher degree. So first wave of a higher degree, second wave of the higher degree. It looks to me that if the price manages to go above that $44.43 and continue to go up, we will declare that we are now in the third wave of a higher degree. All right. But if it fails to go above the $44.43 and come back down 1, 2, 3, 4, 5, we will declare that this is the first wave and we have a flat correction constituting, okay, the second wave. So first wave, and this is a gigantic flat correction, down, up, down, all right, will be the second wave of the higher degree if the price could not break above the $44 and continue to go up to form a new trend. Are you see now? So this is about the higher degree wave count. All right, I'm trying to be a little bit calm, even though it's time for me to eat something, all right? All right? Because when people are hungry, man, it's an angry man. All right? Hungry man is an angry man. So, are you with me? So, we were counting wave here without leaving any stone unturned, all right? Looking at it from different angles, from our own viewpoint and from the viewpoint of other traders, all right? we go to the yearly chart, we highlight that 138.2% level because very, very important. If we're going to have a new trend, it's critical that the price goes above that 138.2% level. Otherwise, it's a correction or a next wave. Okay? But then, all right, we make our forecast, which is just an expectation. And if the price is fulfilling our expectation, well, we are on the winning side. We can take advantage of it. All right? We use market geometry, projecting the price to see possible, okay, reversal point. But then now we have to go to this 1, 2, 3, 4, 5 is a wave count of a lower degree in comparison to what we were talking about on the yearly chart. So if the price manages to form 1, 2, 3, 4, 5 on a monthly chart like this is a wave count of a lower degree. But that wave count of a lower degree, if it happens, all right, will constitute, okay, the third wave of a higher degree. Are you with me? Because I want you to understand it. That's what, all right. Am I doing a good job? All right. I think so. Today we're giving us thumbs up, thumbs up, thumbs up. This good. That's why I'm recording video. Otherwise, I'll record at 2 for stock trader. All right. So more traders are giving more thumbs up, or thumbs up, thumbs down, doesn't matter for me. Thumbs up, I want to see you. All right, that's where I'm putting more video. Okay, if I see that sometimes traders get a bit tired of me, then I move away from them, let them rest a bit, or let them digest everything. Doesn't mean that I'm angry with traders. I'll just leave them alone because I think I feed them too much. All right, you get a message. All right, they get tired of it, so go away, come back again, rest the channel, and then come back. So what I'm saying to you, the higher degree, so now on the yearly chart, this will be first wave, second wave at this point in time. But if the price form 1, 2, 3, 4, 5 down, this will be the first wave of a higher degree, and that gigantic flat correction will be, okay, the second wave of a higher degree. And when that flat correction is completed, then fingers crossed, hopefully we'll have the third wave of a higher degree straight away. Sometimes you may not have it straight away. You may have a complex correction. This is one thing you need to be aware of. You see a clear-cut area wave pattern completed, like I'm showing you now. You see first wave, and then you see 1, 2, 3, 4, 5. You see, that's exactly what I just said. The flat correction is completed. Definitely the third wave will begin. Yes, until it's formed, because we may have another correction, continue another correction that will form what we call a complex correction. Whenever you use the word correction, you say this is a flat correction. Never think that it's finished. Just say, yes, it's a flat correction. That can end up being a complex correction developing. We will see. Then you just take it one step at a time. So what I'm doing here, I'm trying to communicate to trader why you need to take a step back all the time when you are counting your wave. All right, don't jump straight away. All right, look at it, examine your own wave count, and see the possibility. So you see a flat correction, you say yes, it's a flat correction, no question about it. The next wave is likely to be an impulse wave, or another correction, or X, or plus another correction, and so on and so on. And then you're just going gently, gently, gently. Have I left any stone unturned? If yes, let me know in the comment section. I hope you will find this video also useful and we put into use to improve your area wave counts. I pushed it a bit too far today, 34 minutes. That was not my intention. Normally, I want to wrap it up around 20 minutes. My apology to traders. If you have any question or suggestion, all right, put in the comment section. And in due course, I will be recording another video to answer your specific question. If you find this video truly useful, please let us know by giving us the thumbs up. If you think that, George, you were hungry and boring and this is another useless video, please let me know in the comment section by giving us also the thumbs down. And this will put me under pressure to improve my next recording. But if you think this is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, my friend, enjoy yourself and be very happy. We are the TSTW24 traders talking about area wave count without leaving any stone unturned. Have we left any stone unturned? That is the question. Happy trading to you all, and speak to you soon.